All right, guys, we're gonna get started. We got a little bit of a tighter group than normal, but you know what that means? That means that we have more time to talk about people's individual challenges and solve them. And thank you guys all for coming. I think I know most of you, but if you don't know me, I'm Maura McGraw. I've been running this group for about 2 years now. Run an investor-focused real estate team here and a little investment firm. And crazy about all things real estate investing. And today we're going to have a very highly requested creative finance workshop. So, knowing all of you in this room, we have kind of all people of all levels of the game. And no matter what level you're at in the game, financing can be challenging in different ways. Obviously when you're getting started, financing your first deals is a big challenge that a lot of us have encountered. But at different points when you're trying to scale your business and scale your portfolio, again, it becomes a challenge. And what most people don't know is that there are actually about 1 million different ways to structure your investments, how to structure your deals, and it really doesn't get any better than Amy and Jennifer. They are truly experts in creative finance. They do all the normal loans, all the normal lending, but then all the outside of the box stuff. They have access to all sorts of funding sources that most people don't even know about. So I'm just so grateful, so excited for you guys to be here. As usual, we're going to start real quick. Just go around the room, say your name, a little bit about yourself, what you do if you're involved in real estate, so that we all know who's in the room, and then we will kick this thing off. Denise, would you like to start?
Yes, hello, I'm Denise. I'm Maura's biggest fan. I'm Tommy Sue, and I'm well on my way to be Maura's biggest fan.
I'm Lauren, and I'm Laura and Jennifer Davis' biggest fan.
Do you want to keep the chain going?
Yeah, I'm Danielle Crochet. I'm all y'all's newest biggest fan. I'm a representative for D.R. Horton New Construction, but I'm also a investor here in Baldwin County. So,
my name is Nick Ryan, and currently I'm not really investing, but I want to learn about it and try to get involved.
Yeah, perfect.
My name is Brooks. I just looked in the window and I saw some food. No, I'm just kidding. I'm here on purpose. I live over in Mobile, and I invest. I have a real estate license at a referral company and some rentals. I dabble here and there.
Mm-hmm.
I'm Eric Oden with Shop House Properties. Our main focus is house flips, retail spaces, strip malls, and small apartment complexes.
I'm Evan Templeton. I'm a licensed agent, but I'm an investor first, and I do a lot of off-market marketing and like talking to leads and stuff. So do some wholesaling, we do some flipping, and have some rentals as well.
My name is Austin Wells. I'm the owner of Southern Edge Painting. We do flooring, painting, and pressure washing.
Welcome.
Thank you. Appreciate it.
My name is Donnie McGriff. Been investing for a few years, done flips. I still do flips, rentals. Know how to go direct to seller, get off-market deals, but I'll buy on-market deals. Trying to pivot to mobile home parks. I kind of shiny object syndrome. I suffer from that. And moving up to North Alabama in late May, probably, or maybe early June. So if you got any connections up there, call me.
Oh, okay.
Right in the center of Coleman, pretty much.
Awesome.
And, which I know Mara has connections up there. But yeah, that's me.
Dustin Patterson, mostly do Burr Method, do a flip here and there.
I'm Wes Werner. I just moved here from St. Louis. I did acquisitions for an investor in St. Louis, and now I'm hoping to get in the game for myself and start doing deals here.
My name is Harold. I'm a contractor and investor. I'm closing my 10th property next week for the year. I need 10 more deals for the year, so if we got any more deals, I have 2 bursts, so I don't care if they're rehab.
He's an excellent contractor, too. Rare to come by if you need an excellent contractor. Praveen, would you like to introduce yourself?
Hello, everyone. Hello.
Hi.
I'm meeting with Harold next Thursday. I'm an investor. I have a couple of rental properties, and we do fix and flips also. And Maura is our inspiration. We started business with her and we did 8 properties last year. And we are targeting for 20 this year.
Awesome.
All right, let's turn it over to Amy and Jennifer.
Well, we're so glad you're here. First, I want to say thank you, Maura. We are Maura's biggest fans as well. We love being part of her go-to team. She has put together a fabulous meetup and put this together for all of you to learn. And so I know it takes time, energy, and resources. And so she brings everyone together so that everyone grows in the industry. And that's really important, right? And so I love that she has different components. We have cost segregation. So if you've ever heard Lauren and Rob speak, we refer to them quite a bit. Maura sends us people. We love to have conversations. So we are not here to sell you anything. We are just here to open your mind and see what's possible. And sometimes it's just a conversation. So I will tell you that one day last week we had someone that was like, hey, can you just send me a term sheet? That's not us. And you're going to hear why. Because we really care about the people that we work with. And it's a conversation because every investor's goals and where they are in their season of investing is very different. So if you're a brand new person, then you need different tools than somebody that's on the other end of the spectrum that's potentially looking to sell some of their property off. And who do they need to talk to? Do they need cost seg? Do they need a certain type of tax break? So we love the individual conversations of how do we help you meet your goals. It's not our goals, right? So sometimes it's a conversation and we can't help you with a tool that we have, but we're always going to give you wonderful resources and people to come back to. So we love what we do. So we are Income by Design. Amy and Jennifer. So we do multiple things and we kind of think of ourselves as an ecosystem, okay? And we've added components because there's been a need. Typically there's an obstacle, we call it an opportunity. So if there's something kind of a hurdle in our way, we're like, oh, that's not stopping us. We're gonna find a way over it or around it or a tool that we can add to our tool belt. So.
Absolutely, thank you. Jennifer and I created Income by Design because as we were growing together, we needed a place and a space to be able to have that message. So Income by Design is our community of like-minded individuals. We are people of faith, we're abundance mindset. So anything that we have learned, we love to be able to share. And this is our place, just a Facebook community that is absolutely free, that you come in and we're able to share anything that we are doing. And that's what we're going to share here today. So you'll see on the bottom we have unbankable brand and hybrid investing, and then of course anything that we do under lending, it's Inch brand lending. So like Maura said, it could be traditional, it could be private money, hard money, it could be RV parks, mobile home parks, all of the creative things go under one umbrella. And so what we found, that we learned a lot is through stories. So today we're just going to tell you a little bit about who we are and how we got here. And then you have an Income by Design sheet in front of you. We only have, Maura, how long do we have?
An hour.
Okay, all right. And if you will just kind of give me like a 5-minute wave or something like that. So we're not going to be able to get to every single one of these today. We're going to really focus on some solutions that we have found that really makes a difference. So can we go ahead and turn this slide? Yeah.
Let's go to the next slide.
Perfect.
If Maura told us how. There we go, perfect.
Yeah. So my story. So my journey started in manufactured and modular housing. We had about 35 to 40 houses on our lot at a time. And so when we were serving families affordable housing, we realized that we needed other tools. And so we were going into the community and we were saying, hey, insurance agent, real estate agent, we were going, lender and credit folks, you know, because they would come to us and they would have a need. Well, they needed affordable housing. So we could provide certain parts of that, and then we relied on our community leaders to be able to do that. What we found is sometimes we would send them off to find a property and they would not come back. And sometimes we would send them to insurance, and maybe that insurance they just didn't understand, or maybe they didn't have the tenacity that we did. You know, it's got to be quick and fast. And so we opened an insurance company, a real estate company, we opened a mortgage company, and we opened a credit counseling, credit repair company that also led into like a mason company and a toter, because if you can't deliver the houses, you can't put them up, and Hurricane Katrina kind of changed things for us. So as we did that, it was really out of a need. And so I'm like, just like Jennifer said, it was like we didn't just design to say, hey, I want to open a mortgage company. I happened to be, we had to hold a broker's license to be able to do that. So we had individual like chattel or land home and those types of things. And we later did new construction. But I would show up at my lender's office and I would say, hey, look, I'm going to show up and we're going to have driver's license, social security card, pay stubs, bank statements, and tax returns. I'm going to have my 1003 and I'm going to have it in the order is exactly the way you want it. I'm going to show up on Thursdays and we're going to sit down together and you're going to put it and go through DU because no one else is listening to me. And when I send over a client, I want it to be like this. She goes, why don't you open a mortgage company? And I was like, are you coming with me? She said yes, and so we did. And so I didn't know how to do mortgages. I just had the problem. And I needed a solution. So the solution was I needed lending. Well, I had families coming to me and we needed lending, and insurance and so forth and so on. So we did that. Now I will tell you, I'm a mama of 3. My oldest is about to be 29. I have a middle child who I adopted at 2 weeks old, right before Katrina. And he is 20 now. He lives with autism, so I'm a special needs mama. And then, and I have a youngest that is now 18, about to be 19. So along that journey, is that kind of
My business.
Oh, gotcha. And so in that journey, I had other needs, you know, and I'm like, man, there's a lot of things that were going on. So I was married for 19 years. He struggled with his mental health and he coped with alcohol and drugs. And so we were trying to raise our family, run an amazing business. And so sometimes, you know, life, you just have to live life on life's terms, right? And so we learned and we grew. And then 2008, 9, 10, that was a crazy time. And so I experienced a time in my life where I was faced with foreclosure. I was faced with times that my children were sick and we had to be in the hospital. My oldest lives with type 1 diabetes. She didn't grow for 4.5 years. And so we spent a lot of time in the medical. And the reason why I'm telling you this, I needed a different lifestyle. I needed flexibility. I needed my income to continue when I wasn't there. So I needed to serve on a different level. And so fast forward, I experienced more challenges through my life. Our house was struck by lightning. I lost my house. And 2 days later, my mom went in the hospital. She lost her life a few days later. And the father of my children lost his life in a car accident, all at the same time. So I was like, okay, I'm closing about 30 deals a month, running a really large team, but if I was out of there, things didn't happen. So I took a year off. And I took a year off because I had a flip going, I had 5 new constructions going, I was doing the lending, because if I'm lending, I got to put my money to work, right? So that's what I was doing, multiple things at the same time. So I took a year off and I realized, wow, I had 3 surgeries at the same time. And I was like, if I am living life on life's terms, other people are too. And how do we make that difference? Well, other people can build wealth. They just don't know what they don't know. So I'm like, how do I help them to know what I've done now that I'm here? So I joined John Maxwell's team because I wanted to become a better leader. I wanted to be a speaker and a coach and a trainer so I could help other people. And then I was like, wow, I never knew how to do any of this stuff. We did rehabbing, we flipped land, we did all this stuff, you know, and I never knew how to do it. So I joined Fortune Builders and I was like, okay, well now I can learn from other people in a community that are doing things at a high level. So I did that. And so after I was rebuilding my life and coming back in, that's where Jennifer and I, our paths crossed. We are women of faith, and so we were in a networking meeting together, and she asked me to speak at her RIA. And I was really nervous, y'all, because I had been out for a while, and I was, of course, you always say yes. And so we did, and then I realized the things that I was doing all of my journey were things that she was doing on her journey. And so when our paths crossed, it was like, wow, we have something together here that I think we can make a difference. And the reason why I'm telling you these things, and we're going to go through everything that we have done and that are doing and are continuing to do, is all about people. And then it's properties, and that's our purpose. And it's from lived experience. So everything that we do, if we talk about sober living, well, obviously that's from experience. If we talk about senior living, if we talk about veterans, well, my dad was in Vietnam twice, and he struggled with PTSD. So my mama and papa raised me, and then I raised them. So everything that we do comes from a lived experience, from a problem solution. We're going to get into the details, but really and truly, I just wanted you to see like who we are as humans, and then you'll understand why we do what we do. So, all right, Jennifer.
Thank you. And so this is me. I am not from here. I don't have the Southern accent, as you can tell. So I'm originally from Maine. My husband and I owned a chain of Domino's pizza stores for about 25 years. We had 150 employees. We owned all our commercial property. We lived a very busy, kind of crazy life. Whenever we had the opportunity, we were buying more commercial properties. We loved Las Vegas, and so we had friends out there. We would visit Las Vegas, and every time we'd go out there, we'd buy another property. We'd just go out there and buy another property, just for fun, because it was a write-off, right? And so when our last child, so I'm a mom of three. I have a 38-year-old, a 36-year-old, a 35-year-old. I have a 16-year-old grandson, 15-year-old grandson, and a 10-year-old granddaughter. And I don't retire well. They keep telling me. My dad calls, "Are you still doing that house thing? Don't you want to retire?" And I have to have a reason to get up. So we sold off some of our commercial property in Maine. We sold off our restaurants when our son left for the military. And he's the baby. And we went to Las Vegas for fun. Now I got there in 2000. We started buying in like 7, 8, 9, and I got my license there in 2011. I got it because I was doing investment property. So I wasn't your traditional realtor like some of you, right, are saying. I came from the investment side. That was still a time when there were a lot of short sales going on. So we were literally putting offers in on properties, and you put $100 in with the offer and waited to see. Some came back in 3 months, some came back in 2 weeks, some came back in 9 months. So we were flipping a lot of properties. We were wholesaling some stuff. We were buying stuff out there for like $40,000 with tenants in place at $900 a month. It was just, it was dumb money. And I really loved working with other investors. But I was in a huge brokerage, and that brokerage, they did a lot of training for their realtors. I think I had 380 realtors in that one office in Las Vegas. And every morning, it was cold calling, right? FSBOs, all that stuff. Anybody heard of Mike Ferry or Tom Ferry and all those guys? Okay, that's how I was trained. And I kept looking around the room, and these realtors were like, they would just burn through people, right? That was just the next. That wasn't me. I wanted a relationship with people. And I kept looking at the realtors and thinking, they are making so much money, but they're not doing it for themselves. They weren't buying anything themselves. They weren't creating wealth or income for themselves. It was for everyone else. And I thought, this is a little messed up. I'm the one that has all these rentals and all this stuff happening. This is weird. And I'm not even a realtor that knows what I'm doing. So at the same time when we did that, you all had Hurricane Katrina. And we had sold off a lot of our businesses and the commercial property, and which means you have some really big tax implications, right? If you've done good. So there was this thing called the GO Zone. Anybody familiar with the GO Zone here? Okay, so it happens throughout the country. Federal government does it. That if you invest in markets that have had natural disasters, or they did it after 9/11 in New York City with commercial property, if you come into a market and you build new property and you put it in rental status, you can depreciate 50% the first year. And you can go backwards 5 years or forwards 5 years. So we were able to recapture all of those taxes that we would have had to pay because we invested in a market. So we built a couple $1 million worth of rental properties along the Gulf Coast, so in Long Beach and Biloxi and Ocean Springs and I don't know, a few others. We put a property manager in place. We were in Las Vegas, loving our life, living it, doing all kinds of fun real estate stuff. 2020, the world changed. And we happened to, I was bored, so we went to Maine to visit our kids and our family and came down to Mississippi to check on our properties. They were disastrous. 10 years old, I was paying a boatload of money, and I was so upset. My husband is a nuclear engineer from Penn State, very analytical, not great with people, right? He does not know what a hammer is, okay? But he's really good finding a penny on a spreadsheet. So we're a really good balance. I got in the car and I said, we're moving. So we drove back to Las Vegas. That was like November, December. And in 2021, we moved to Mississippi. And since then, I have rehabbed about 24 properties. We still have midterm, long-term, short-term. Wholesaled some, flipped some, started an HOA in one of the communities that was a disaster. Ran a RIA for a couple of years and met Amy. And together we were like, wow. I had been on this journey, like she said, and she had too. And we were like, coming from the real estate investing side and she's coming from the lending investing side. If we put that together, what does that look like for other people? And how do we help them move forward, right? Because there's always a challenge. And I was doing things in my life that I did not know had a name, like the first house that my husband and I bought. We had an SBA loan because we were buying Domino's Pizza stores. We had great credit. No bank would give us a loan because we were self-employed. We were trying to put all our money back into the businesses, so we were taking as little as possible. My kids love Goodwill because we'd go to Goodwill and pick anything out of the dollar box back then, right? So we were like, we don't understand. So we had to do lease option with a seller. We didn't know that's what it was called back then. One of our kids was going to college and she didn't want to live in a dorm, so we bought a house. She put a bunch of friends in the house. Co-living. It didn't have a name back then. And then we sold it to another family that needed it while their kid was in school. I have another daughter that needed help with their first house. We bought it. We filed a lien, put it with the county, just like a bank would. I was seller financing. I didn't know there was a name to that, right? So there were lots of things that were happening, but I didn't know what they were. So then through learning, right, and finding solutions. So now we know lots of names for these things, and we had the ability to come together. The biggest thing we found is we hated saying no, right? People wanted to buy a house, families wanted to move forward, and like Amy said, things happen in people's lives that they don't have control over. Consider if you had a car accident and you're in the hospital for a long period of time, and your attorney tells you, do not pay your bills. Because if you pay your bills, the lawsuit's going to be different. So I need your credit to be bad. Don't pay your medical bills. They're all going to get taken care of. You're a professional person. You make really great money. Now you have really crappy credit. based on what an attorney told you to do. Now you win the case and you have a boatload of money so you can buy a house. But now you can't buy a house because you have really bad credit. So was that person's fault? They're not in a van down by the river not paying their bills, right? They had a life event. And so we know how that happens, right? So we wanted to come together and solve some of those problems. So you want to go to the next one? Perfect.
You know, and it's funny, Jennifer, as we were learning and growing together, I was like, so my dad was killed in a motorcycle accident when I was 27. And so I flew to Minnesota, and I now have this hotel that I don't know what to do with, right? And so I'm living there for like 3 months, and I knew that I wanted his legacy to mean something. He was an electrical engineer. And so I had these people coming in the middle of the night. I had all of these things that I know nothing about. I also have Menards now that I know, if any of you have been there, I didn't know, it's like a Lowe's. And so we became really good friends, and I built a relationship with some contractors. We kept it for about 7 years, but I had a nonprofit that comes to me, and they wanted to have a battered women's shelter there, which I think is phenomenal, and the nonprofit would not approve it. So fast forward to 5 years later, because I would not sell, although I had a real estate agent that was helping me, and I would not sell unless it was for something that really made an impact as an impact investor. And so at the time, I didn't know what I was doing, so we had the president that came from that nonprofit, and he offered to purchase it from us, and he couldn't qualify. And I didn't know any of this. I was a lender, so I understood it, but I didn't know. So we negotiated as just real people talking it through, and we did a owner financed. Of course, the real estate agent wanted to get paid up front. That didn't happen. There was a quarterly payment that happened, and then everything worked out, and he is now running our hotel. That is his hotel, and it has sober living there. You have AA, Al-Anon, NA, and women that are welcomed there, and it's making a huge difference on the backside of the Mississippi River. So, but we were doing things that we didn't know because it was a problem and a solution. An obstacle is an opportunity. So what we knew here on the agent side, I had my whole entire career, so when we shut down the manufactured home and I picked up on the mortgage side, and I kept getting agents sent to me. Like I would have major brokers, and they would go, here's a new agent, I need you to teach them. Here's a new agent, I need you to teach them. And we had 80 closings in the first year as an agent. I was like, man, this is really fun. Nobody really does this. And so but what would happen is, well, they would come to me and they would have a problem and they needed a solution. Well, sometimes I had to say no. And sometimes I had to go, well, you have to wait. You have this credit or this income, especially if you're self-employed, right? Because we got all these guidelines. And so I knew that I was teaching agents how to be able to do that. I got kids, y'all. I can just keep talking. And so, but I knew, I was like, wow, this bank side thing, like this is really not cool, right? Here's inside the box, although I was doing it. And I'm like, well, there's got to be another way. Well, fast forward, there is another way. So we met some really amazing people that educated us, right? And it's called Unbankable. Now Unbankable brand, y'all, is who we are. So Unbankable brand, we have buyers who cannot buy. And then we probably have a lot of you in this room for buyers who can. We call those hybrid investors. So we have real estate agents that do a lot of great business. They love helping people. They love helping families, investors. But when it's a no, what do? Right? And so from that, it is unbankable. But then we had a lot of the investors, as Jennifer was telling you, that agents were doing transaction, doing really great business, closing 80 or more. What are you going to do with that money? And when do you have time to learn all this stuff? Because you're serving families. So we call that hybrid investing. So on the hybrid investors, if we came to an investor and just say Mara has a buyer who cannot buy, and I've got Jennifer she could go to get a DSCR loan. She has 20% down. She really doesn't want to use all of her money because everybody knows that other people's money is better than their own, right? And so you got Mara over here and she goes, hey, we have someone that maybe their house burned down. Maybe they had to be off work for a year. They were commission only and they can't get a loan, but they have money. So then we go, hey, we have a hybrid investor, and we put the two together and we tell the story. It makes sense. And now we had a match made. We call that deal creator. So we took a no to a yes. Now Mara gets her full commission. The hybrid investor is delivered on a silver platter. Comes with a tenant that found any home that they wanted. They went shopping. Now you have a buyer who cannot buy and a buyer who can, right? Any home on the market. And now they come together and we're able to make a difference. We give them 1 to 2 to 3 years. So our investors are really happy. They didn't have to find the property, analyze the property, rehab the property, have the holding cost, and they didn't have to worry about moving a tenant in. Call it tenant toilets and trash, right? Because now we are bringing in someone who wants to purchase this home that is their own. They just needed a little bit of time. They're going to take care of it. They're going to go to the HOA meetings for you. They're going to do all the things because they just put, and we'll show you some case studies here in just a moment. Sometimes they're putting $100,000 down, which means
a little better than a $2,000 rental deposit.
That's right. That's right. So we have some case studies that we're going to be able to show and go through some details with you. But this is where we come in to go, we can turn your no's into yeses. It's not a good fit for everyone, and we do have solutions for them too, right? But when it's a no, well, then we kind of thought about it. We were like, well, those real estate agents that are doing all these great things and they want to invest in real estate, but they don't know how to invest, and it took a long time to be able to learn all this stuff. What if we could just help them to be the hybrid investor? Maybe not on their own deal, maybe on another deal, right? And so now a W-2 person who knows nothing about real estate. My son is 20. He lives with autism. He can be a hybrid investor. The school told him that they couldn't educate him. But he can make $800 a month, $900 a month in cash flow with amazing people like you that partner with him, right? And then when it's time and they can get their own loan, well, we'll show you in a minute, but you could get $30,000 to $40,000 as a bump on the end. We call that a slow flip. So he gets to change his life by helping someone else to change theirs. And now that's a beautiful thing, right? Anything else on this slide?
Yeah, I just wanted to mention, so traditional realtors, you're constantly chasing deals, right? Next deal, next deal, next deal. Now your market here is pretty good, but the market's been a little wonky, right? If you look at the entire country. We have a war going on, gas prices up, interest is up, right? The other thing you want to think about, if you are chasing those deals, not only can you be an investor yourself, we also have something that's called REMLO, that you can get paid on. As a realtor, you can get paid on the loans that you're helping your clients get. The rules changed in 2022, and so if you want to be a full service agent and take care of your people, you can do that. The other thing, I know there's some agents in here, so we have a lovely lady from D.R. Horton, and I am pretty sure that there are people that come through that building that want to buy a new home, and they cannot get approved, right? What do you do with those?
We have preferred outside lenders that we'll move them to depending on the situation, and we do have a lot of success with that. But there are some people that we still can't get across the finish line.
Now, our investors love it because they're putting people in a brand new home. Think about it. If you're an investor and you have the opportunity to make cash flow every month on a brand new home that you don't have to worry about repairs and everything like that, that's an amazing investment, right? So, and you still get your commission, right? So if you're turning people over to us or you want to do it on your own, you're happy, whatever. Same for lenders. If you're a lender and you, as a lender, you have turn downs for sure, you still want to be the hero to that family, right? So you can turn them over to us, we help them through the process, and they come back to you when they're ready for their own loan, okay? So we don't want you to just turn those people down and say, oh, you got to wait 2 or 3 years. We have options now for them.
Well, and then we got to thinking, y'all, because we did that and we closed a bunch, and then creative minds, right? Whiteboards, you just never know what's going to happen when you get some crazy entrepreneurs together on a whiteboard. So we were like, well, if we could do that, what if we could teach? So our hybrid investors are like, yes, I want them, bring them to me. And then our real estate agents are like, well, when I get one, I can send it to you. But the market starts changing, right? And then we're like, well, how do we find more buyers who can't buy? Because if I had, challenges with my credit, I may not come to a bank because I know I can't get a loan. I may not come to a real estate agent because I know you're going to tell me no. And I already have a lot of stuff that I shoulda, coulda, woulda, and now I'm not going to come to you. But what if we could tell other people that there's a rent to own? So we were like, what if I just went into Marketplace and I did a program of rent to own? It's not this house or that house, it's any home, right? So it's, let me see what I can do with this. So what happened is we did what we call free 99, because I'm not paying for all these leads, and I'm just putting out there what we do and how we can solve the problem. And it attracted a whole lot of people. Now some of those people, I would say 80% can buy. They just didn't know they can buy. And then we had the others that couldn't buy. We're like, wow, well, Jennifer, if I have these buyers that can't buy and buyers who can, and they're all 50 states, well, what about if we just referred them out? Well, she has a real estate license, I don't, but I have a brokerage. So when I refer those out to amazing people in different areas, then we have that stream of income. She's a RIMLO, so she fought me the whole way. She's like, we don't do loans, y'all. I don't originate loans. We have a team to be able to do that. We're strategists. We're on the front end. So like, if there's a problem, there's a solution. There's an obstacle. There's an opportunity. So that's where we come in. But we're like, well, those real estate agents are not getting paid for that. I'm like, well, in 2022, they changed it. So it was like, well, do I want to keep showing up with donuts or do I want to give them dollars? Okay, well, if they're getting the loan and they're getting paid for the real estate and paid for the loans, and they have the ability to go, it didn't work, well, they now have a solution, which is unbankable. Well, if they need the unbankable, they still get their commissions. Well, then if they want to invest in real estate, well, now they can do hybrid. Well, all of that makes sense to me. Well, what if we could help our real estate agents be able to market that way? Okay. And then maybe they have a database that they've been doing it for 30 years. What if they could go back to their friends and family that they actually helped, that they were a great fit, they helped them, they were their guide, and we can tell them now that we have a new program. Well, all of my hybrid investors over here that don't want to go find them now have more opportunities. So then if we're like, wow, what if we ask the hybrid investors, do you work with any real estate agents that actually have any turndowns, or any builders that actually have turndowns? Or maybe are you building any large developments? We have a $20 million project right now going on in Tennessee. So what about them? They're going to partner with someone to be their lender, right? She has a preferred lender. That's cool. She has other lenders that are able to do that. That's cool. Well, then you have another solution. But what if you wanted to keep it? What if you're the investor that wants to keep it and you want to be the hybrid? What if you love to be able to solve problems and you wanted to build 6 houses? Could you do that? Yes. Could you do it on traditional?
One of you said earlier that you search for houses, and you have a lot, right, that people want to give you, but you're not necessarily trying to hold houses right now. They're sub 2, they're whatever. What if you had a line of people that wanted to rent those from you, and you got a good down payment up front, and you made monthly income, and you're not taking care of tenants' toilets and trash, and then you got a bump on the end when they actually get their loan? Would you consider holding it then?
Well, and here's what happens too. You got your flippers out here, right? Market's going to be market. Well, we've got one right now in Texas. It's not pretty. We needed solutions. That real estate agent was not is versus Mara, and she doesn't have the creative solution. So we helped her, she marketed, and she attracted rent to own. She attracted lease option. Well, this investor, they really wanted to do a flip. But the market changed a little bit. So we helped them with the marketing. Now they have a lease option, so she's not just gonna rent it, she's gonna stay the hybrid. So we took that flip, turned it into a DSCR loan. She's gonna be able to make more money than she would just cashing out, but she didn't have an option because she had it on the market for 6 months. And she kept having to pay her hard money loan, which we were not yet. And so they have to be paid off. She had a gap funder, a lender that she has gap funds. So she didn't have any other solutions. So we don't get to control the market either, but we have to live life on life's terms. So if we have solutions, so if Mara has one she's listing, maybe she found the house, the investor, she's doing all the great things, everything is perfect, and she lists a house, well, how do we attract more buyers? Okay, well, we have buyers who cannot buy, that's not gonna come to me because I have credit or we don't have solutions. Well, if we create that, well, then we create a win-win-win. So what happens is we have flippers that go, hey, I want an and. Well, you could flip houses. You could do mobile home parks. You could do all of the things. Well, this is an easy button. Jennifer's gonna call you up and go, hey, here, I've got this. We're gonna show you some of the slides, like it's infinite. We're going to have showing you the one we did in Texas, and it's infinite. And so the one thing that it was like, wow, we kept learning. So then we had an investor that came with great credit, and he wanted to buy a duplex, but they found a higher price point, and he didn't have the full 20% for his DSCR loan. And so what we did is we had an investor that says, oh, I'll buy it for you. Now you have 2 investors that actually are doing a lease option, which is really cool. And we had we thought, well, wow, if we could do that on a single family, we could do it for investors, could we do it for sober living? Could we do it for transitional housing? Could we do it for neurodivergent, like my son, right? Could we do it for senior living, like my mama and papa? Could we do it for veterans, like my dad? We could do that. Because when you have the operators, most of them are actually leasing. Because your nonprofit is not going to own the property, right? And so they're operating that, but when do they get to build wealth? They're taking care of all of the people that need the recovery because that's what they were called to do. But when do they get to build wealth? Well, if they can't qualify, why can't we just buy it for them for their for-profit? Right? And now they're building wealth and changing the world at the same time. So that's impact investing. So when we're talking about these different strategies, there's not just one way, right? And so that's the really cool part.
I wanted to go back to the listing portion. So typically a realtor comes to you and they have a listing package and a marketing package and they tell you all the wonderful things they're going to do. Right now there's about 30% of the marketplace that wants to buy a home but doesn't qualify based on bank boxes. Okay? It's about 30%. So again, they're not the van by the river making no money. Right? It's just something happened in their life, okay? Could be a divorce, could be your 1099. I'm 1099. I look terrible on paper, on purpose, right? So, when you're going to do that listing package, you have the ability to say to your sellers, or if you are the seller, right? You are swimming in a different ocean than these people over here because everyone's fighting to sell this house, right? And get the listing. But if you come in from a different perspective and say, hey, look, I do lease option or I do rent to own, think of the more people you can get through the door to help your seller. And then even if they don't want that house, you just got more clients. Same for you guys that are flippers and things, right? You want that end buyer. What if you just did an open house? Lease option, rent to own. You don't even have to be the investor. We have investors that are happy to take these deals. But you might want to learn how to do it too because it's a really good return. Okay, we'll keep going. So we talked about lease option, rent to own. Everybody knows what it is, right? Okay, So
Two
our-
instruments. So there's two instruments when we do the lease and the option though, and it's a predetermined price. So just so you know, like for example, on that lease with an option, so a client comes in, right, we have the referral that comes in, they can't buy, and we'll go over some slides, so I won't go too in depth because we'll give you some real case studies. But there's two instruments. So you have a lease with an option that is predetermined. So that price that as today's price is going to be looking a little bit different in tomorrow's price. So we know like 3 to 5% of equity over each year. So of course we do all the heavy lifting on the backside as a deal creator. But when we deliver that to our hybrid investors, it comes on a silver platter. So yeah, so a little bit different than your traditional.
Yeah, and some of you will own the house if you're doing a lease option. What's really different about the Unbankable brand is we let them go. We encourage them to go shopping with a realtor and pick any home on the market. So it doesn't have to be just a house that I own, right? Not the traditional. And we want success for that family. So we pre-qualify them very much like a bank would, right? So it's not, I'm going to take $1,000 down, I'm going to take $1,000 a month, and I hope you fail because I'll just get the house back again. That is not our program. Okay? We want success. Sandwich lease. So who's done some sandwich leases? Do you know what that means? I'm going to buy the property on lease option or contract for deed, and then I'm going to lease it out or rent it out on the other side. I'm paying $1,200 a month. I'm going to rent it out for $1,800 a month. Make sense? Okay. Seller carryback. We get lots of calls about that, right? Somebody's got a mobile home park under contract, or an RV park. I said mobile home park. We have an
I think
RV
he does
park.
have the mobile home, but we had the RV park that just had the seller carryback for $780.
Yeah, so the seller was willing to hold that, I think it was 40% of a 1.1. And so with Lauren's help, we found a great outlet for someone, right? Because why wouldn't an investor want to invest with a seller that's willing to be second? And we have some people that are willing to do that. So seller carrybacks, we can do those on different properties as well. Owner financing, you already know what all that is. Wholesale lease, you know what that is. BRRRR. So we were just talking about the BRRRR. So if you're going to buy it, you're going to fix it, you're going to flip it, and then you want to hold it long term, okay? So that fix and flip, we have options for the purchase price, 100% of your rehab money, and then your ARV, and then we can move that immediately as after your last fix and flip draw to a DSCR loan. Just a 1% transaction fee on the loan amount. So you're not going through all that again. We already have all your stuff. We know what the ARV is. We already knew what the appraisal was. Now we can just move it to a DSCR at the end. And it's just based on the rate at that time in the market when you do the last draw. Contract for deed, y'all know what those are. So each state is a little bit different, and we do this in 50 states. Not the ones that are not landlord friendly, okay? But some we have to do contract for deed, okay? Subject to, you guys have probably done that. Corporate credit. We just had someone, Mora's, that needed to purchase, she actually had an RV park under contract. And she's doing multiple things. She has the ability to take this other one down, but the lender wanted some extra liquidity, okay, to make sure she was going to be solvent. Well, we have something that we have as corporate credit. You can actually get, for 6 to 18 months, 0% interest, no collateral, anywhere from $30,000 to $300,000 in a couple of weeks. And it's creating a credit score for your LLC, and it's not reported to your personal credit. So if I gave you $100,000 today with 0 interest, no collateral, you could flip a property, buy one for 60, put 40 in, sell it, pay it back, it just cost you 0. How many times do you want to do that?
We have a one that is in Gulfport right now. She just got 112,000. It was like for 2 weeks, and she's doing a flip, and there's no collateral on that 112. It's pretty cool. So it's really just about solutions on that, and this is just we're just touching the iceberg, right? So there's always, again, we're strategists, and so there's always solutions there. So now we're going to share some of our specifics here. We talked about REMLO, which is your real estate mortgage loan officer, that all of our real estate agents get paid without doing the work. You don't have to be licensed, you don't have any fees, you don't have any things, and they change it back.
You don't have to go take the test.
No test, no fees, in all 50 states. So any of those interested in learning more, we're going to do some classes, but you now can be. So we talk about income stacking, y'all, and so this is what we're talking about. You might like one, it's kind of like a buffet. You might like one or all, but if you are a real estate agent doing great business and you want to get paid for that, you can with a team behind you. You don't have to learn how to do loans. And so the traditional real estate, we do that as a referral. We are not MLS, so we just we bring in the deals and then we refer them.
We call Maura when we have clients over here and we're like, hey, we got a new one. Do you want one?
Sometimes that's traditional mortgage. Sometimes it's creative. So if we're going to send a buyer who cannot buy, we're going to send one who can. Then we have the Creative Real Estate Pro. So there's a lot of deal structuring. If you're looking, we do self-storage. We do just the crazy.
Car washes, RV parks.
Snowball stands.
Golf courses. We're doing a big golf course right now. Ground up construction on apartment buildings. Hotel guts and rehabs specific for veteran housing with the VASH program.
We have a treatment center that we're doing. So there's just a lot of creative ways. If we can't do it, we have capital partners that will buy it for us. It doesn't matter about your credit. They don't have a payment. So there is a way, y'all. So where there's a will, there's a way. So we have some creative solutions there. Hybrid investing, of course, we talked about that. We're going to go over some case studies here in just a moment. Private money lending, you kind of know what that is. Again, we raise capital. So everybody's buy box is a little different. We have some family offices we work with. So, just don't let it hold you back. So if you have a question, there's no silly question, how can we make this work? Then we just have some solutions that we put into place. So hard money lending, we talked about that. Gap funding, you guys know what that is. Sometimes we only need it for 24 hours, which is cool. Sometimes you need it for 2 months or longer. So residential investing, and we're always open to put your capital work too, right? And we do have capital partners in place. Residential investing, buy, hold, and flip. And we have JV income. So there's just a lot of different ways. We kind of really focusing on our lease option because we only have a short amount of time.
So I just want to touch on this. For those of you that are in the beginning stages, and that's probably not a lot of you in this room, your operating agreements are different than your LLC. And you can have operating partners that maybe have better credit than you. Maybe if you're a 530, but your mom is an 800. Mom now is 82% owner of that LLC. You are 18% because you have experience, but mom has credit. You go way higher up on the totem pole for lending and better interest rates, things like that. So we really look at all of those things to help you structure to get the best options you can. So that's why we like a conversation. It's not just how many people are in your LLC, what you got,
It's like, funny. Well, we have people go, can you just send me what you do? We're like, I think it just is a conversation because what do you need? It's really about what you need. I know that's kind of broad, but there's no way. And we come from lived experience. So if we've either experienced that and needed a solution, and that's what we put into place. lender couldn't close it. So the lender knew that we were the weird ones, right? We have unbankable brand. And so she called and she says, hey, I've got a family that has $100,000 down that wants to buy this $400,000 house, and they have to close in 2.5 weeks and they have nowhere to go. The listing agent, the buyer's agent, everybody's crying, everybody's
Title,
upset.
all the work's done, appraisals are done, everything.
So I got on the phone on a Saturday and I talked to this this mama, and she was like, Amy, I don't know what I'm going to do. And so we talked through it and we were like, yeah, we could totally help you. So I called Jennifer, this was early on, y'all, and I was like, hey Jennifer, are you deal ready? Are we deal ready? Like, do you want this one? It's $100,000 down. And she goes, well, let's look at it. So we worked it up and it was like, oh, you mean we could purchase this house and get $20,000 at the table back with $871 in cash flow day one, with a tenant that is really excited to be able to close on this house, who real estate agents are actually going to get nothing. And wait a minute, we can do a bump on the end. We didn't show you that. Did we show you that? Yeah, sales price. So we bought it at almost $400,000.
So let me back up for 1 second. The people had this under contract. They had, this is a bougie little town down in Texas. Not a very large home for $400,000. Y'all should be familiar with that. She had it under contract for $379,900.
Yes.
And when I got involved, I called the realtor and said, hey, it's really expensive to close in Texas, just so you know. Because they got hurricane, wind, hail, all that kind of lovely insurance too. And I said, is it going to appraise? She said, the appraisal's already done. The appraisal's $415,000. It's like, perfect. Changed out my name. I will be my LLC will be the investor. Bump the price to $399,900. I want $20,000 back at the foreclosing allowance. And so at $400,000, if I do a DSCR loan, how much do I have to put down? 20%. What is that? $80,000. Guess what she mailed me before I went to the closing? $100,000. So I now have $20,000 in closing costs, and I have an extra $20,000 just for signing the paperwork on day one. And a tenant that moves in that's paying $38.50 a month, I make monthly cash flow of $871. I literally have no money in the deal. And when she's ready to buy it and her credit is fixed, I get another $40,000 at the end to sell it to her.
And then the lender who thought of us now gets the buyer back 1 to 2 to 3 years later, and she can do the loan. The real estate agents in that got 100% of their commission, by the way.
Title got paid, the insurance agents got paid, everybody won. This woman goes to the HOA meetings for me. She put $100,000 down on a house.
Seller celebrated.
Yeah, seller was an older couple. They really couldn't go up and down stairs anymore. They really needed to be out of the home, and they were really happy to. So we solved everyone's problems.
And ours too, right? So this one was, I don't know, second or third one. Free 99, right? Marketplace. I learned how to, hey, what if we could create our own? So this is where she came from. And so we had a conversation. She was a good fit. We had went to another meetup just like this. We have some investors that were friends of ours, and they were like, what are you doing? I want to do that too. And so we called them up and said, hey, we've got this deal. What do you think? And they said, yes, I want it, right? And so what happened, do you remember the story for this particular?
Yeah, they had, their kids are like middle school. The dad had worked at a job for a really long time. I think he was a police officer. And he had a heart attack on the job. He was out of work for a long time. He's fine now. He's back to work. But in the interim, right, they just couldn't afford their bills that they had. And she wasn't working as much as she could because she was trying to take care of him and the kids and lots of things. So their credit was really not great, right? But he had some severance pay and things like that, so they had money to put into a house. They just didn't have the credit to match it.
And so that's where the investors, actually two of them, they decided to do it together. And so we brought them the deal. We told them about it. So they purchased it at 283. Well, the real estate, actually, we started, they did 4 contracts, y'all. They were going to move to Florida. Yeah, and so we teach and coach and train our real estate investors everywhere because our capital partners, our investors, they trust us. And so we didn't have anybody in Florida yet. And so we call somebody to say, hey, who do you know? And this particular agent, sometimes we're just not good fit on the creative side. It's because we have a buyer who cannot buy and a buyer who can. And so just so happened she decided that after 4 contracts, she did 4 home inspections, she did all of the crazy things, and she's like, hey, wait a minute, I think we're gonna stay in Mississippi. And so that's where they ended up buying. And so, but this hybrid investor was okay to be in Florida and also Mississippi. So it didn't matter, we still had our capital partner to be able to close, but for her.
Yeah, and our investors tell us their buy box, because we'll have people waiting in the wings. Some people are okay with the flood, being in a flood market, some aren't, some don't want to be in Chicago, some want to be in driving distance, some don't care. I own that house in Texas. I've never seen it. Seen the home inspection, but for me it's comfortable because I've owned property throughout the country for a long time, so I don't really care, right?
Well,
if it
and
makes sense.
we have boots on the ground everywhere we go because we make relationships and partnerships, and that also gives us a really good ability to be in other markets.
The other thing that I think is really important is, so you're going to put 20% down as your DSCR, but you're getting a chunk of that back immediately because they have to put down a minimum of 10% of the purchase price, okay? And you immediately know what your cash flow is, and you immediately know what your sale price is in the 1 to 3 years. So you maybe you're a pilot or a doctor or whatever you are, and you're super busy and you don't have the time to go find a property, put the tenant in place, all the fun stuff, right? You still need to invest because you need some tax write-offs, right? This is a great opportunity for that. Or if you're brand new and you're like, oh, I'm a little nervous, you already have all the questions answered. You already know what you're going to make every month. You never have a vacancy. You know what the sale price is in the 1 to 3 years, so you know what your end make is, and you have to put less in up front because your tenant buyer is bringing a chunk of it to you on day 1. So it just kind of makes sense.
And one of the things, so having the team in place. So you're not just doing a regular standard lease option. It is coming to you with a mortgage loan analysis. That loan officer that is knowing what needs to happen during that time for this tenant to be able to get the credit there, they're working with the team so that when it's ready, right, when they're ready, then they'll be able to go ahead and do the things that they need to do. One of the things comes to my mind, we had an attorney. Our team did a 1.2 million. I think the attorney was under contract. He was putting 20% down. It was no big deal. Something goofy happened on their credit, and they were like, oh. So we came in and bought a 1.2 million. Now, hybrid investors, we have to know your buy box. So then that makes it, it fits where it's located and what your purchase price is. So sometimes it's 200,000 is our minimum. 10% or more is what we like to see to be able to qualify. So it's really about the story, and we are doing our underwriting for our hybrid investors. And so then we come together, we do all the compliance part, we record that, we store that. We have a course that we create, it takes about maybe an hour and a half for free. that educates you on that process, and that you're able to feel confident and comfortable with becoming a hybrid investor.
I just want to mention, there's another one we have in Mississippi right now. So the investor, he's not from here. He's a city boy from Boston. And he came down, we made sure he met the title and the insurance and the cost seg. People put him in touch with the right team.
Oh, wait a minute, we have to tell. So he did fly down to Mississippi, and we did make sure that we're connecting with the right team. So we took him to see new construction, rehab. He didn't know what sheetrock was, y'all. He's on his
13th, 14th, might be 15 now.
Yeah. He didn't know what sheetrock was. He had never done anything in investing. He is now on his 15th property. But when we came, we went to see some construction, and one of our investors hey, I got this property that's over here at 80 acres. Y'all want to go see it? So we get in the back of his truck, and we're driving around, and he thinks this is the coolest thing because he's never been in the back of the truck, and it's only his third time going to Waffle House. So that was really, really fun.
The cool part about that was that they had a bunch of money to put down. The person that was moving in really only wanted their monthly rent to be I don't know, I think it was $1,600. And that's what she was comfortable with. That was probably what her payment was going to be when she got into her actual loan on her own. And so she prepaid 3 years worth of rent to the investor, our friend, Richard. He's an MIT graduate.
Valedictorian.
Valedictorian at MIT.
Is he single?
He's married.
So he needed a certain amount of cash flow. So you can say to me, hey, I'm not doing anything for less than $400 a month. I'm not doing anything for less than $800 a month, whatever that number is, right? Well, he wasn't willing to do anything under a certain number. So she said, well, this is the house we want. This is what I'm willing to pay for rent that I'm really happy with on my lease. So I'm going to prepay $18,000 worth of rent. I'm giving it to you today, and just every month you're going to take $400 off that because I only want to pay X monthly. It's still a way to solve problems, right? So everybody's still happy.
When they go full circle, they get their full option fee credited back to them. Some of our investors, we like to teach we like to teach a rent credit, because every month after month that you pay on time, take care of the property, do all the right things, you get a credit you could use for your closing costs. So it's super important to us, like we said before, for the success. And so that is really setting them up for success. But then after we think about it, whiteboards, crazy blondes in a whiteboard, and so we go, wow, well, what if they wanted to sell this? Maybe something happened and they wanted to sell it. Would we allow them to be able to sell it? And she's like, why not? So with the purchase price here, on the sales price of $311, if she didn't want this house anymore, and she had a friend that wanted to purchase it for $350, she could have leased this house and cashed in on a house that she was just leasing. She never owned it. And we're okay with that, right?
So where can you rent a property, get full credit for your deposit on a closing, or sell that and make money? And if this person comes in here and puts granite countertops and upgrades the bathroom or whatever they do, and this now appraises for $350 or $380, doesn't matter. The purchase price is $311, and they get the credit. That is all their own equity. As a tenant, where can you build equity?
And if you go opposite way, right, if the market does change and something happens and the appraisal isn't there where they can turn it around, it's okay. We'll continue to collect, a monthly cash flow. We'll give you an extension. But if you didn't do the things that you said you were going to do, there may just be a fee for that extension. So we're going to, be able to push you along to be able to do the things that you need to do. So $5,000 or $10,000 and an extension, and then we'll continue.
And it's 1 o'clock, or 3 minutes. So I want to make sure we have questions. I want you to see this. Do you see this return on investment? You are not getting that in the stock market, or I'm not. And I'm not getting that on CDs, and I'm not getting that at a bank, right? So, anywhere from 18 to 38% we see on almost all these deals, all of them. And you don't have to do any work.
Of compliance, you mentioned compliance with regard to the corporate credit option. That guy from Anchor scared the hell out of us a couple of months ago when he said about the rule changes, and it makes people cautious.
Yeah, he was fantastic. I really loved him.
By the way, they held that. Now FinCEN is not a thing right now.
It's not a thing?
It's not. It's paused.
Yeah, because it scared everyone. The compliance issue, I mean, then I thought, well, you guys, between you guys and Lauren, I probably won't go to prison, but maybe. Because it was like, you have to be able to track the money and LLC.
And we do that too. So that money, like she gave, she wired me $100,000. Okay. Now, that's a big chunk of change, right? We want to make sure that that money was seasoned before it came to me, so that when she goes to get her own loan, I can legally and compliantly, it wasn't, she pulled it out of her mattress, show so that I can give her full credit for that at a bank when she goes to get her mortgage.
That alone is a huge value, the compliance issue, but also the return on investment is very impressive.
Yeah, so it's 1 o'clock. If y'all have to go, happy to. We are happy to answer questions. We're happy to stay. If you take a look here, if you can book a call on that QR code, email, hello, it is time. We are a family operation. One of my oldest lives in Maine, and she works behind the scene and tries to keep us organized. Some of you know, Victoria. And then you can follow us. That is our
Income by Design.
Thank you.
We created that community so we could all stay in touch, and so we have some really cool events, some master classes, and if you want to go deeper, please let us know. Our phone number is here. This is our team VIP phone and text line. So if you just want to text us more, we'll make sure when we're doing the master classes that you are able to get that invite. We do about 30 to 45 minutes with a Q&A, and it's all free, and so we go a little bit deeper into specifics of that. And so if you also want the course for hybrid investing, we're doing a little bit of revamping, because as we've been doing it for many years now, we figured out that there was a few things that would be super helpful to our investors. So
but you
about
can book
30
a call.
days. Yeah.
We love getting on. We live on Zoom. Maura's been on our Zoom with us multiple times. She brings people in and goes, "Here you go," right? Yeah, so we're happy to do that. Happy to talk through things, and just give us a scenario. We'll help you.
Deal or no deal?
Yeah, deal or no deal. We have some shirts that say that, so yeah, we're happy to do that. Any questions?
How do you screen that they'll, like at the end of 3 years, they will be grateful?
We actually do it up front.
Right, what's that?
So it looks like a traditional mortgage. So we're going to do all the things a lender will do. We're going to pull all of that. We're going to do all of it.
The lender does it. They sign off on it as a licensed loan officer.
But we know up front, because I'm just going to use you as an example. You're a bad example, but he's going to tell me ahead of time, hey, I have really bad credit and I already know it. So when we send them to the lender and they get everything ready, they go, okay, if this is the only thing we have to work on, then they give them a plan and they say, this is what you're going to do in the next 1 to 3 years. So everything is set up just like a traditional, but let's say you're 1099 and you haven't filed your taxes, or you write everything off on your taxes, right? And so one of our guys had that. He was investing, I don't know, IT guy. He had a technology company. For the next 3 years, he had to get with his accountant to file his taxes differently, so he looks better on paper for a couple of years to be able to, then you go do whatever you want to do, right? So we're going to give suggestions based on what the lender tells you to do. So they're going to be screened just like a traditional buyer, knowing there's there's one little glitch here, and we know what that is up front. So
Well,
as
and if
long
they
as it
need
makes
1 year, we're going to
sense.
give them 2. If they need 2 years, we're going to give them 3, and so forth and so on. The one thing that I would tell you too, that I just thought of, is when you have a couple, just say they're getting a divorce and they need to sell their house and they need to buy 2 houses. And so a lot of times through that divorce or something, it doesn't look pretty. And so they can't sell to be able to purchase. And so in that, it doesn't matter if they have a foreclosure or bankruptcy or like new credit, it has to make sense. So we look at the person, not the paper, and it just really needs to make sense. And so then we deliver that to our hybrid investors with the backup, with the plan, and then we keep in touch with them over time. We have our hybrid investors that'll call us back and go, hey, we just closed on this, what do we do? And we're not gonna leave them, we're gonna coach and guide them through before, during, and after. And there's, 30 years in the business, there's some compliance part that in the event something were to come up, we need to prepare you as a business owner, as the hybrid, to be able to run your business like a business.
But for you, those of you that have fix and flips, or you stumble on these properties that people want to get rid of, and they just want you to take over payments or whatever that looks like, you can use some of all of these same tools, right? Think about how you use them. So we're happy to have the conversation with you. Other questions?
Who's the perfect person to work with y'all? Is it investors? Is it buyers? Is it, because I feel like
It's all of them.
Is all these people. Is it kind of everyone?
Yeah, so lenders call us because they got to turn down.
Yeah.
And they still want the person to be able to get a home, right? Realtors call us because they got to turn down.
Yeah.
Realtors call us because they have sellers that can't sell a house. We might be able to put other buyers in there, lease option, right?
Title company calls us, we have a problem. Insurance people call us, we got a problem.
Yeah. Investors call us because they want financing, because we do really out of the box kind of financing, or they're like, hey, I have this property and I don't know what to do with it. Do you have some ideas? Sure.
So y'all are the creative deal makers.
Yes.
Yeah. And then we do whatever we do, and you have the ability to earn an income, then we call that income stacking, and that's where Income by Design. So if you want to do DSCR loans, you want to refer them to us, we will pay you, right? Because it's B2B. You don't have to be licensed. So if you want to refer us over and do a name and a phone number for any of these types of lending, we want to make sure that it's a win-win-win for everyone. So if we can do it, you can too. There's not any part of this that you cannot do and get paid on it multiple times. You might get one piece, you might get 2 pieces, you might get all of them. It just depends.
Okay. Thank you for your time, your attention. We appreciate it.
So I want to say with Jennifer and Amy, we worked with them a lot, and then we introduced them to one of our he owns 30 RV parks, and he's interested in private lending and investing and creative deal making with his RV parks as well.
Yeah.
Yeah, and we refer to these guys too. It's because we have investors all the time that they're like golf course guys. They spend a boatload of money. They've never heard of cost segregation. They don't even know what I'm like. You're leaving so much money on the table, So we love to know other partners in the room so that we can refer our people to you as well.
Yeah. And we have a community that's all over, all 50 states. We just took 30 investors on a cruise just to hang out and be able to weird out and do crazy stuff, and how do we grow together. There's nothing that if we've planted a seed and you want to know how do you market for that? How do you build this side, or how do we refer? If it's weird, then there's got to be a solution, and we're happy. And I would say plan to join the call. Because that's what we recommend, is just listening. You're going to learn just by listening. And again, we do really big stuff, but we do really small stuff too. So it's really about the solutions.
I know when I met Amy and Jennifer in the local region of Mississippi, and then went on a cruise with them, and it's just meeting the people that fit as well, that might need you for a house or anything, and need us for tax strategies, need them for I call it fantasy, but deal creating, things like that. So.
The idea of going on a cruise with the 3 of you is a fantasy.
It was really fun. We had a great time, didn't we?
We'll end up owning the cruise ship.
You'd be surprised. It was really funny. We took about 30 investors with us. Lauren and Rob went with us, and we taught classes during the daytime at sea. But you would be surprised at how many people picked up deals on the cruise just because they chose to wear a shirt that said, I got money or I got deals. It just started great conversations, and they met people from all over. So people were literally doing deals in a hot tub.
Oh, hell yeah.
Yeah.
And guess what? It's a tax write-off.
Pharaoh keeps getting better.
Yeah. So if
Do you have
questions-
anybody has any deals right now that comes to mind? I'm happy to be able to just strategize. Yep.
Private lending too, I've never met a private lender, so I met them on the boat. And he does different private lending, hard money, which is more of a flat fee instead of percentages, and Renee talks to you about that.
Yeah.
And our private money partners, they close, we got one right now closing in 2 days. Doesn't matter about credit, doesn't matter about income, doesn't matter appraisal, doesn't matter anything. And you walk through and you're like, wait a minute, what's holding me back? So it's really about what's holding you back or anyone else, and it's just worth a conversation.
All right. Well, thank you. Have a great day. Come see us if you have questions. We'll stay for a bit for answers. Thank you, Maura, for having us.
Thank you.
More of the fishing charters.